All right, hang tight. This one's a deep dive. It seems like anyone with an idea that includes even a brief reference to AI is finding their way into investor pockets to launch the machine assisted version of any task you can think of, from AI for coders to AI for pets. The possibilities seem limitless right now, which of course means that everyone reading those kinds of stories can come up with a passable idea for a brand new, never before thought of AI startup and get rich. These people are coming to me for advice a lot right now, and that's fine. I don't hate this kind of thing. But I gotta warn you, there's nothing new here. High tech spawns a gold rush every few years. It was the gig marketplace before AI, and then crypto before the gig marketplace, and then mobile before crypto, and maybe social before mobile. I mean, it goes all the way back to the wheel, like the actual wheel. But again, this isn't a bad thing. In fact, I'm a huge fan of the democratization of technology that allows a non-technical, usually more business-oriented founder to get their ideas into the arena of high-tech entrepreneurship. If you're coming to me asking me if you should try to build out your high-tech idea as a non-technical founder, I am rooting for you. But here's what I don't want you to do. Until recently, democratization of tech meant that anyone who could scrape together about $50,000 could hire people to build the tech they envisioned. That's not a ton of people, but believe me, it was far too many people. Because $50,000 only got them part of the way from their idea to a market-viable high-tech startup. Unless the founder's idea was extremely prescient, and unless every last decision the founder made was correct, that $50,000 usually dried up before the first paying customer was acquired. That's $50,000 lost. I've seen it dozens of times, and by the time the story gets to me, it's too late to fix. So let's fix it before it becomes a failure. A very successful non-technical entrepreneur recently asked a question at Teaching Startup, my product to democratize startup advice. It was about spinning an AI company out of his current company. Now, he'd never taken on an investor and wasn't going to for this project, but at his current run rate, $50,000 was not out of reach to get this new company off the ground. So first, I got that out of his head, but then he crystallized perfectly what made him susceptible to that $50,000 trap. He doesn't know much about AI, coding, programming. He doesn't have time to create, learn, and manage this new business. He doesn't want to risk a ton of money on it because AI is fast-moving with high levels of competition. And again, it's not an area he knows well yet. But this self-awareness is also something that's going to serve him well. As a non-tech founder, he needs an equal mix of knowledge, time, and money. Let's call that the three sides of the high-tech startup success triangle. And like all triangles, if you reduce one side, let's say the technical know-how, you need to dramatically increase the other sides, which can lead to throwing a ton of time and money at the equation. However, ideally, a non-tech founder should start with each side as small as the knowledge side and then grow from there. A subject matter expert, or SME, is usually wrapped in the role of at least one of the founders. Here's what happens when it isn't. I left Automated Insights, one of the first AI plays, in 2017, 3 years after we exited. While figuring out what to do next, I wanted to put together a tech team to try to ride the same ride over again. I already had the team, but what technology would have the same promise that AI did those 10 years ago? Of course, in 2017, the answer was blockchain. This is when crypto was in the same place AI is now. It had been demystified a bit, a bunch of money had already been made, but there was no killer use case out there for the underlying tech, and it seemed like anybody could hop on the train. I had an awesome team, an amazing machine learning technologist who would be our CTO, I had an operations jack of all trades for our COO, and I had an extremely skilled and successful digital sales and marketing pro, our CRO. After 6 months, we came up with nothing, and now I know why. We didn't have an SME. We had the right pieces in place, and in fact, we could have built an amazing AI company on the spot, but we were fascinated with what we thought blockchain could do, and we went down a lot of individual rabbit holes trying to figure out if our hypotheses were correct. We had little knowledge, and while we didn't spend a ton of money, we wasted 6 months of time. Had we had an SME in blockchain, we would have done things differently. In fact, we probably would have dropped the whole blockchain angle and just done something else. When you're a non-technical founder with a high-tech vision, you are indeed the CEO because you know what you should do if you want the business to succeed. What you need is an SME who knows what you shouldn't do if you want the business to succeed. Now, normally I would say start with no code. But for a non-technical founder, if time is an issue, doing no code on your own might take more time than there would be to capitalize on any first mover advantage. That said, I still believe no code is an option to reduce costs, and I'll get to money in a minute. Now, as I said, you need an SME, a COO, maybe a CRO. Maybe all of that gets handled by you along with your CEO duties. And I have no qualms about that. You might not sleep for a year, but it's your life. The CTO role, that's the part you'll need to hire in, partnering with a couple of tech people or a firm who could bring out your vision for a percentage of the business or percentage of the profits, maybe with a small stipend on top. Now, coding isn't cheap, and it's not something you can really do on the side once you're up and running. So that's a big ask of a talented person or firm. But whether you do this piece by piece or throw $50,000 at it all at once, the requirements are the same. Build something that sells so you have more money to build more of it. So when I say find the right partners, these are people who believe in what you want to do and will commit to getting it done right, piece by piece. Again, I'll talk about money in a minute, but if you want to shrink the time side of the triangle, you'll need to find that kind of partner first and then negotiate their rate. The leverage you'll have in those negotiations depends on your track record as a business leader and the economic strength and viability of your idea. If this is valuable enough, you may be able to negotiate a deal that offsets a chunk of the upfront cash without a huge percentage of equity or profit. Then you'll both be incentivized to build quickly and properly. I've said this before, money can't be coaxed, convinced, asked for forgiveness, or negotiated with. If you want to increase the money side of the triangle, you'll need to decrease the need for money up front. So what you're going to want to do is this perfect marriage of minimum viable product and go fast and break stuff. You'll want to put a plan together at the beginning. Build, launch, measure, prove viability, repeat. You'll reference the details of this plan from the ideation phase to partner selection and negotiation and onwards. And the faster you can get to proving people will pay for what you want to accomplish, the better, even if you're not immediately using high tech to get it done. To close the no-code loop from the last section, you might not even need a tech partner for the first few stages of this plan. But again, if time is critical, you might engage one, lay out your plan, and have them no-code it up quickly. Build, launch, measure, prove viability, repeat. This is how I operate. Whether it's a bootstrap project or working with a venture-backed team, we will run with no-code, low-code options before we unleash our highly overworked development team on a feature. I don't want to do that until I know that the feature will not only have ROI, but will be profitable almost instantly. That's a strategy you can execute with millions of dollars from investors or hundreds of dollars from your own pocket. And that's my basic framework for building a high-tech company. If you're non-technical and you want to be able to build high-tech without a lot of investment up front, you're best off investing in an SME, finding a balance between vendors and partners, and iterating your MVP cycles very quickly. So every once in a while, you're going to get a post that came from built-in as opposed to Inc. The ones for built-in are a little bit deeper a dive because that's what they do. They talk about building stuff. This one is how I talk to non-technical founders about building technical companies. Not something I super recommend. I do recommend that people learn to code. And even more importantly, I do recommend that people learn to no code because the concepts of programming are more important for business people to understand than the lexicon. I know sometimes I sound like a broken record and sometimes it's very boring. Build, launch, measure, prove viability, repeat. It's something that I say over and over again. It's something that goes pretty slow and it's not super exciting unless you're a geek like me who actually loves watching the code come to life. It is something, however, that does allow people who don't have access to huge amounts of money or rich relatives to start their dream startup and at least see if it's worth starting. From deep dive to the esoteric and strategic, you can get all of that at Teaching Startup. That's my project for entrepreneurs. Teaching Startup provides access to actionable, insightful, and honest startup advice for entrepreneurs at all experience levels, regardless of their connections or resources. You get access as a Teaching Startup member to 700 questions, answers, posts, and polls. The questions are asked from member entrepreneurs just like you and are answered by expert entrepreneurs like me, and people like me. So if you love what I'm doing here and you want to support it, thank you so much. Please subscribe, like. But if you want to support me, you can help me help you, and at the same time, become a better entrepreneur by becoming a Teaching Startup member. Go to teachingstartup.com. I appreciate you. Now go do great things.